It's great to be back with you again. Over the past few sessions, we have taken a deep dive into the foundations of Smarts, our execution systems, our automation stack, and the intelligence layer that powers everything behind the scenes. Today, I want to shift the focus. Instead of looking inward at what we have built, I want us to look outward at where the market is going. Because ultimately, technology only matters if it aligns with where opportunity is moving. And right now, one of the most important shifts happening in global markets is the rise of prediction markets. Prediction markets are experiencing explosive growth, with monthly trading volume surpassing $20 billion in early 2026, a 17 times increase in just 6 months. Yet, despite this growth, the sector is still in its early stages. When compared to the broader cryptocurrency market, which commands a significantly larger multi-trillion dollar valuation. This gap signals something important. Prediction markets are not just growing, they are emerging as one of the next major frontier for on-chain capital and user adoption. But what truly changing here is not just the size of the market, it's the nature of what is being traded. For decades, trading was limited to traditional financial assets, stocks, commodities, currencies. Got it? Now, we are entering a world where markets don't just trade assets, they trade outcomes. Instead of asking, what is the price of this asset? We are now asking, what is the probability of this event happening? Will a candidate win an election? Will a team win the championship? Will inflation rise above a certain level? These are no longer just discussions. They are becoming tradable markets. And what's powerful about this is that markets are evolving into systems that price real world outcomes, such as elections, sporting events, and macroeconomic decisions. These are now being expressed as tradable probabilities. At first glance, this may look like speculation, even gambling. But underneath that, something much more important is happening. Prediction markets are essentially global information aggregation systems. They take opinions, data, sentiment, and real time developments and compress all of that into a single number, which is probability. And here is where things get interesting. Because whenever you have fast moving information, fragmented platforms, and human decision making, you will always have inefficiencies. Alright, prices don't update perfectly. Markets don't move in synchronization. Participants don't behave rationally. And those gaps, however small, however brief, are where opportunity exists. Now, let me share where Smarts comes in. At Smarts, we are not just participating in this market, we are optimizing at the execution layer. We detect inefficiencies across fragmented prediction markets, dynamically route capital, and extract value through fully automated strategies. By combining real time intelligence, atomic execution, and cross market arbitrage, we transform prediction markets from a speculative environment into a structured, yield generating system. This is not just about entering a growing sector. This is about positioning ourselves at the execution layer of where the next $1 billion flows will happen. We are not just entering prediction markets to compete as another platform. We are not here to predict outcomes. We are here to do something very specific. We extract value from how markets price those outcomes. Because if you think about it, prediction markets are not simple environments. They are fragmented across platforms, driven heavily by retail participants, and highly sensitive to real-time information. Alright, which means prices can temporarily diverge, relationships between markets can break, and inefficiencies can appear constantly. But capturing those opportunities requires something most participants don't have, which is execution capability. To truly understand the scale of this opportunity, you need to understand one key principle behind how these markets operate. At their core, Prediction markets are built on a simple mathematical structure. All possible outcomes of an event must converge to a fixed value, typically $1. But in reality, that balance is not always maintained because markets are driven by fragmented liquidity, human behavior, and timing differences. This equation is often temporarily distorted, and when that happens, that's where we step in. So now let me illustrate this in a very simple way. Let's say there is an event named X. Will X happen? You might see yes or no. Yes priced at 0.48, no priced at 0.49. Both combined, that's 0.97. But at settlement, one side will always resolve to 1. That gap, that 0.03 difference, should not exist in a perfectly efficient market, but it does. And when it does, that's a structured opportunity. Got it, guys? When human emotions and fragmented liquidity distort that math, our systems step in. Leveraging upon the capabilities of our smart automation stack, we target 3 specific core arbitrage opportunities. First strategy is parity. We refer to this as parity-based arbitrage. Our systems actively identify situations where the combined cost of all outcomes is below the granted settlement value. When this happens, we construct what is essentially a market neutral position. We are not betting on direction. We are capturing the spread between mispricing and eventual convergence. All right. So our second strategy is cross-platform latency. The second category of opportunity comes from latency between platforms. When major news breaks, markets don't update at the same time. Decentralized platforms like Polymarket or Ozuro may react differently compared to centralized platforms like Kalshi or Betfair. This creates temporary price gaps across markets. For most participants, these windows are too fast to act on. But for automated systems, this is exactly where execution matters most. All right. And our third strategy is correlated markets. This third category is what we call correlated or combinatorial opportunities. Prediction markets are not isolated, they are interconnected. For example, a presidential winner and the winning political party. These should logically align, but under real market conditions, especially during volatility, they often don't. Our systems detect these inconsistencies and execute across them simultaneously. So to be clear, we are not predicting outcomes. We are extracting value from how markets price those outcomes. Got it, guys? Now, identifying opportunities is only half the battle. We know that speed without safety is entirely reckless. For years, the decentralized finance space has been a minefield for retail traders. You find a great opportunity, you click execute, and suddenly you are hit with a massive hidden fees, a failed transaction, or predatory bots stealing your profit right out from under you. To compete in this environment, execution is everything. Because in fast moving markets, latency matters, infrastructure matters, precision matters. This is where Smarts differentiates itself. Our systems are designed to process real-time data efficiently, act within extremely tight windows, and execute only when conditions meet strict criteria. In our foray into the prediction markets, we have implemented technical systems to wrap Smarts is an impenetrable, institutional grade layer of risk management, designed specifically to protect you. And just as importantly, we operate with strict execution discipline. Before any transaction is submitted, we simulate the full outcome. We account for fees and slippage, and we validate whether the opportunity still holds. If it doesn't, the trade simply does not happen. In addition, we utilize atomic execution logic where possible. One of the biggest fears in trading is getting caught in the middle of a market shift and being left holding a losing position. With smarts, your trades are an all or nothing event, meaning the position is either executed in full or not executed at all. You never end up with a half-filled losing position. You either you either capture the perfect profit or your capital remains safely untouched. Alright guys, and where spotted, we use more efficient and private routing pathways to reduce unnecessary visibility in public transaction environments. When a normal retail user executes a trade today, it sits in a public waiting room where institutional boards can see it, front run it, and steal the profit. We have secured private pathways directly to the blockchain validators. We bundle your transactions and send them through completely invisible, encrypted channels. Wall Street cannot see your trades. Wall Street cannot see your trades coming, which means they can never front run your success or trap you in bidding war. So when you zoom out and look at the bigger picture, prediction markets are growing. More participants are entering. More capital is flowing. And as this happens, market inefficiencies naturally increase. And as that happens, our role becomes very clear. We are not part of the noise. We are not part of the speculation. We are the layer that operates underneath, capturing value from how these markets behave. We are not competing with the massive centralized exchanges that are desperately trying to enter this place. We are simply extracting value from all of them. Let them spend hundreds of millions of dollars in marketing campaigns to acquire retail users. As the prediction markets grow, smart scale with every single inefficiency created. We are transforming the chaos of global events into the most reliable automated yield generation tool in the world. And this architecture is exactly why smarts will inevitably win in this category. We are not a prediction platform. We are the ultimate execution layer. Alright guys. And this is not just something we are just talking about. It's happening. I am proud to announce that on the 1st of April, we will be officially launching prediction markets live on the Smarts platform. This is where everything we have discussed today starts to become real. You will be able to explore it, interact with it, and see exactly how these opportunities play out in real time. With this new module, Smart's prediction market contracts are designed to generate estimated returns ranging between 18% to 36% per month, depending on contract structure and system performance. These returns are driven by AI-powered analysis, structured execution strategies, real market inefficiencies across global sectors. This marks a major step forward in our growth, bringing new layers of opportunity directly into the Smarts ecosystem. We are not just expanding the platform, we are expanding the way users can benefit from it. Got it? The future of markets is not just about trading assets, it's about trading probabilities. And in that world, the winners are not the ones who guess correctly, but the ones who execute efficiently. So thank you for your time and thank you for being part of this journey.